Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me are Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. Indian skincare brand Mamaearth's co-founder Varun Alagh tells CNBC-TV18 that reports of the company withdrawing its IPO are baseless, says that the DRHP should be approved by next month.
Oyo plans to undertake a two-thirds cut in its IPO size. As per reports, Oyo is working on a plan to sell just a third of new shares it originally planned to float, likely to file IPO papers this week in what's going to be its second attempt at getting the regulator's nod. First Citizens Bank agrees to acquire all deposits and loans of the troubled Silicon Valley Bank. Federal Deposit Insurance Corporation, the regulator which took over the collapsed bank 2 weeks ago, confirms the move. Paytm gets an extension from Reserve Bank to resubmit its application for an online payment aggregator license. Paytm needs government nod on past investments to comply with FDI guidelines. That's before it can reapply in 15 days. Parts of Twitter's source code were leaked online in a legal filing. The company says the leaked codes were posted on GitHub, a Microsoft-owned platform which has removed the content. Twitter also asked the court to identify the alleged infringer. China's search engine giant Baidu scraps public launch of its ChatGPT-like AI bot named Ernie, converts public launch event to a closed-door meeting with a select group of Chinese companies testing the generative AI platform. Those were the headlines that we're tracking for you this evening, but beauty and skincare brand Mamaearth has denied reports that the company has shelved its IPO plans. Speaking to CNBC-TV18, the company's CEO and co-founder Varun Alagh has said that the reports of the company withdrawing from the IPO process are baseless and unfounded, adding that he expects SEBI approval on the DRHP by next month. Take a look.
The reports are largely baseless. We are still in the process, an IPO process. First step of that process after filing DRHP is engaging with the banks, engaging with, more importantly, the regulator, and awaiting approval on the draft prospectus that you have filed. And as we speak, we are engaging with SEBI, and SEBI is reviewing our prospectus. Right, we are hopeful that by next month we should get our approval on the prospectus. 90 to 120 day period that the regulator takes. And let's also keep in mind we filed over the New Year's, and not a lot of people are working in the week of 31st Jan and 31st December and all of that. So there is a bit of non-working vacation days which are there. And queries is a standard part of the regulator's process. And they want to make sure that enough clarification, risk assessment is being added to DRHP so that consumers can make the right decisions, and retail investors can make the right decisions. And I think they have shared their queries. We have already responded to all of the queries. Their early feedback from investors who have seen our document and our story is very, very positive. And they haven't seen as much interest in terms of the number of investors who want to meet us and talk to us about our business. And that just tells us that it also depends on the company, the business, and the business performance which is going on and what you forecast and foresee over the next couple of years. And I think from all of those perspectives, we're not as worried about interest. I think there'll be significant interest when we go in.
All right, Mamaearth, host of SVB Bank. Moving on, serial entrepreneur, co-founder and ex-CEO of Milk Basket, Anand Goel, has launched his next venture, Sorted. It is an omni-channel platform for quality fruits and vegetables and claims to be powered by proprietary technology and a franchisee network of digitized mom-and-pop stores. Co-founded by Nitin Gupta and Sahil Madan, the tech-driven fruits and vegetables platform has so far raised in excess of $5 million in their ongoing seed round. To tell us more about Sorted, joining me now is its founder and CEO, Anand Goel. Anand, welcome to Startup Street. First, tell me, what is the pain point you're solving with Sorted, and then talk to me about the business model and the offerings.
Hi, Shruti. Good evening. Thank you so much for having me. When it comes to the pain point, the biggest pain point in this industry is wastage. And I think every problem in agri-tech starts with wastage and solving wastage and how can we deal with it on on a very holistic basis. We have primarily three shareholders, the first being the farmer. And the biggest problem with the farmer is the value realization for their product. And that's what we are solving for the farmer. The second stakeholder becomes the mom and pop shop. I think we realize that there is a lot of issues that they are facing when it comes to selling fruits and vegetables. This is about the time, the resource, and the capital which they're deploying in engaging in this activity. So we are working on a full 360-degree view on that.
Okay.
And for the customer, the most important one, I would say, is the fresh product produce. Can you get straight from the farm fresh produce to the customer on a timely basis within few hours of the harvest? So a big plethora of pain areas, I would say, that we are solving for the customer.
All right. Okay. So Sorted will enable access to straight from the farmers, quality fruits and vegetables at a highly competitive price to customers through the medium of their choice, be it call, message, online or offline. And all this powered by a network of Sorted franchisees, which are the existing mom and pop stores. So tell me, Anant, how many farmers and how many stores have you partnered with?
A big count, Shruti. I think from a farmer perspective, we are looking at we have crossed 100 plus farmers.
Okay.
Interestingly, farmers produce different fruits and especially vegetables during the different seasons. So I think we are looking at a total universe of 200 to 250 relationships that we want to form over a period of time.
Okay.
In terms of stores, it's day zero for us. We just came out of a pilot mode where we experimented with 10 to 12 stores initially, and we are growing very fast. Not having the exact number as such, but trusting you with the thought process that we are doubling ourselves every week or every 2 weeks. And it's a very healthy input and a very high demand that we are looking at.
So, Anant, you mentioned that you've just come out of pilot mode. So if you could talk to me about your current operations, your reach and scale, what are your key markets?
So our key market that we are launching in, Shruti, is Gurgaon. We know Gurgaon in and out. We have operated our last startup in Gurgaon for years and years, and we were the market leader in Gurgaon. So starting with Gurgaon, we would like to become a market leader in Gurgaon. We have set ourselves the next 6 to 8 months to become a market leader in Gurgaon and having the largest ownership of around 180 to 190 crore Gurgaon market on a monthly basis. Once we achieve that, we would look at expanding into NCR. And NCR would means Delhi, Noida, possibly Faridabad. And we take it from there.
Okay. And what is the revenue model that if you devised for yourself, how do you plan to make money?
Oh, planning to make money. So, Shruti, everybody makes money in agriculture. That's a great thing. Unless you do something wrong fundamentally, and we believe in not doing wrong things. So we buy low, we sell high. So there are multiple middlemen involved in the supply chain. So if you remove middlemen, then that's a value that you keep for yourself. Second, as I said, reducing wastage. With a lot of money from product perspective, from value perspective is going into the wastage, especially with the lot of infrastructure coming in with our government policies. We are very hopeful that a lot of wastage can be removed with the combination of public-private partnerships with cold chains, and reducing wastage actually creates a lot of value for the entire value chain. Okay. So money making should be relatively easy in this space if things are done right.
All right. Anand, like I mentioned earlier, you've raised over $5 million in the seed round. Who are the investors and how do you plan to allocate the funds raised?
So Shruti, this is interestingly what we call internally is a trust round that we have created. And when I say trust round, it has come a lot from the ecosystem, from the CXOs, from the founders, from many VCs, from few HNIs, ex-investors of Milk Basket. The idea here is that the ecosystem believes that we have proved ourselves. We know how to deal with consumer. We know how to deal with the hard things. And if a team can solve this, then possibly this is the team that we have put together to solve this big problem. And how do we plan to use this? As I always say, there is a talent, there is technology, and there is territory. There are three things on which I believe every startup invests their money. We spend a lot of money, I would say irrationally, on the data science, on the technology part. So over 60% of the money or 70% of the money goes into that. Another 20 to 25% goes on to the supply chain, which is operations and everything. And the rest goes into your management and marketing. Our marketing budgets are typically the smallest in the industry. So that's how we bifurcate our spend.
All right, Anand, we've completely run out of time, but wish you the very best in all your growth plans. Many thanks for joining us on Startup Street.
Thank you so much. Thank you so much, Shruti.
Well, we'll take this forward, and now in our next segment, industrial service SaaS marketplace, Wendwiz has backed $8.3 million in a Series A round, which was led by Soren Investments with participation from several other investors, including angel investors. Now, with this, the total capital raised by the startup to date stands at $11.3 million. And joining us now to discuss this is Rajesh Reddy, who is the CEO and co-founder of Wendwiz. And also with me is my colleague, Arundhati Ramanan. Rajesh, thank you very much for your time here and for joining us here on Startup Street. If you could start by telling us, what are these product enhancement and team expansion plans you have? Now that you've raised this fund, you already have about 40 employees, I understand.
Yes, thank you for having me, Ritu. So currently we have around 15 plus clients whom we work with. When I say clients, it's large enterprises, manufacturing enterprises. And we have more than 14,000 plus MSME project vendors on the platform. The current investment which we raised will go towards deepening our relationship with the existing clients and also adding more features to the vendor engagements which we have.
All right. Hi, Rajesh. Arundhati here. Wendwiz is a SaaS-enabled marketplace digitizing CapEx and industrial services procurement, and you specifically focus on the manufacturing industry. Can you take us through what you have on offer? How are you creating value for your customers?
So if you pick any large manufacturing enterprise, they constantly keep investing into their own existing ecosystems or setting up greenfield projects for expansion. Okay, for doing these expansion projects, they engage with several large vendors for the projects, as well as a significant number of MSME players to execute these projects. Okay, we as a platform help these large companies find the right possible set of vendors for engagement and execution of the projects.
That you operate in, who are your competitors, if any, and what is the total size of the opportunity that you're trying to capture at Wendwiz?
So there are a lot of contemporary companies, Ritu, in this market. We have not really seen an exact competition in terms of whatever we do, like-to-like comparison, but there are a lot of companies who are addressing some parts of the same problem, but not really the same problem. And with respect to the opportunity size, we as a company see that nearly $80 to $100 billion worth of capex happens in the manufacturing and allied spaces in India every year. And we are working towards bringing more efficiency in how these projects are done on an year-on-year basis.
All right. Are there any new offerings in the pipeline? You're working on some pilots to strengthen your vendor side offerings, right? So, and tell us a little bit about that. And also, what are your best performing products and what's the demand you're seeing?
So currently our hero product is the discovery product, where a large enterprise is able to post an RFQ on the platform and is able to find the best possible pool of vendors for the job. Subsequently, we are looking at tools which will work towards making the engagement between these two entities better, the large enterprise and the MSME player. And post that, we are working on tools which will help them track the job execution better. So that's going to be the subsequent steps which we are working on. And we are already working on with some clients on pilot phase.
Rajesh, but largely if you could comment on the environment, because essentially you're saying you're working with SMEs, you're working within the manufacturing space. And if we had to go by the figures, the last quarter GDP figures, for instance, we are seeing continued weakness in manufacturing, and CapEx hasn't really picked up to the extent that it was expected to. How has that impacted your business in the last couple of years, and what is the sense on the ground? Is it really picking up now?
So with respect to that, Ritu, we are solving a very core problem which exists in the manufacturing ecosystem. And without Wendwiz or with Wendwiz today, already the scale of CapEx is already happening, and companies are looking to bring in more efficiencies in the existing scale of CapEx itself, which is significantly large. So whether that particular number is going to grow exponentially or a lot more is only going to be an advantage to us. But the current scale itself is a large enough problem to be approached by a platform like Venvis.
All right. And what about revenues, Rajesh? Where will you close this year? What's the road to profitability looking like?
So we are in very early stages of our engagements with the clients here. And at the same time, with respect to our we are already making revenue through our client subscriptions. Currently, we are working on the clients engaging with the vendors and going forward towards making large-scale jobs done through the platform.
All right, Rajesh, thank you so much for joining us on the show today. We're completely out of time and we wish you all the best going forward.
Thank you so much. Thank you so much for having us. Yeah.
On that note, it is time for us to head into a short break. On the other side, we delve deep into India's startups in the travel and hospitality space to understand what's working for them. Stay tuned for that.
Welcome back. You're watching Startup Street, and it's now time for our special series, the Unicorn Health Check, where over the past 1 month, we've created a report card of our most valued startups, delving deep into what is working and what is not. But today, we're going to look at India's startups in the travel and hospitality space, and Arundhati is standing by to give us those details.
The global travel and tourism industry went through a tough period during the pandemic, but bounced back quite quickly post the pandemic. The global market is set to surpass $8.9 trillion by 2026, growing at 3.1% CAGR from 2021 to 2026. The same can be said for India, with the Indian travel market expected to reach $125 billion by FY27. Let's now take a look at the startups in this space. The COVID-induced ban on travel hit hospitality chain Oyo pretty badly in FY21. However, the company was able to claw back some lost ground in the last fiscal. So let's take a look at the numbers then. Revenues from operations grew over 20% to come in at close to 4,800 crore rupees in FY22, while losses dwindled 51% to a little over 1,940 crore rupees. Employee benefits emerged as the largest cost head for Oyo, forming around 27% of the overall cost. Expenses totaled close to 7,000 crore rupees in FY22, and on a unit level, the company spent 1.46 rupees to earn a single rupee. Valued at $2.7 billion, Oyo plans to cut its IPO valuation by 2/3 when it goes public, as per a Bloomberg report. In a town hall held by the company's chief Ritesh Agarwal, Oyo said that it would reach 800 crore rupees in EBITDA by FY24. The hotel chain is now preparing to file a fresh IPO document as soon as this week, the report added. Next up, let's take a look at Ixigo, which is backed by the likes of Invesco, Sequoia Capital, Elevation Capital, and others, and is valued at around $500 million pre-IPO. Ixigo's revenues grew 2.8 times to 379 crore rupees in FY22 from a little over 135 crore rupees a year ago. A steep rise in employee benefits and advertising costs dragged the company into losses, which came in at over 21 crore rupees. The company had reported a profit of 7.53 crore rupees in FY21. With a 2.9 times surge in costs, the company's expenses came in at a little over 402 crore rupees. Ixigo spent 1.06 rupees to earn a single unit of operating revenue in the last fiscal. So while Ixigo has received approval from the market regulator to list on the bourses, the company is waiting for the right market conditions to hit the bourses now. Now let's take a look at the two profitable companies in the sector. First up, the market leader Make My Trip posted its highest ever operating profits in the December quarter on the back of a demand surge for leisure travel and improved consumer sentiment. The company turned profitable after it reported profits of $0.2 million versus a net loss of $9 million a year ago. The company's revenue stood at $170 million, and the travel aggregator is now thinking about an India listing and is currently listed on the NASDAQ. Meanwhile, Ease My Trip, which is listed on the NSE, is backed by Nomura, HSBC, Sundaram Asset Management, and others. The startup reported a 4% year-on-year growth in net profit, which came in at 42 crore rupees. Now, revenue from operations surged 58% to 136 crore rupees, and the company's EBITDA for the third quarter improved to 59 crore rupees, led by healthy top-line growth and a persistent focus on operational efficiency. Now, the company's expenses stood at 82.5 crore rupees. Now, trends suggest that travelers are back on all travel segments, including leisure, business, pilgrimage, and corporate events, and this will drive growth in the coming years as well.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.